The global economy is currently navigating a complex landscape, marked by the lingering effects of the pandemic and the challenges of inflation. The pandemic has altered the inflation process in significant ways, causing lasting damage to supply that is expected to keep labor markets tight and sustain rising goods prices. Furthermore, 2 years of elevated inflation have likely altered wage and price-setting behavior. Inflation has been a persistent issue, with 2021-22 delivering the largest and longest-lasting inflation shock of the past 3 decades. This shock threatened to become embedded in price and wage-setting psychology. However, the disinflation has been narrowly based, primarily focused on declining energy prices and moderating food price inflation. Core inflation, excluding the effects of energy and food, has remained far more elevated. The labor market has also been significantly impacted. Despite the fading of pandemic dislocations, labor markets have remained tight. Global unemployment rates have fallen, with both developed and emerging markets experiencing rates below their pre-pandemic levels. This tightness in the labor market has led to a significant acceleration in wages. However, the global economic outlook is not all doom and gloom. The deceleration in global CPI, from a multi-decade high rate of 9.3% in 1H22 to a projected 3.3% in 1H23, reflects the fading of last year's negative supply shocks and promotes global growth resiliency. Yet, the global economy is not out of the woods, as central banks strive to restrain demand to manage inflation risks. Private sector health is expected to wane. This could potentially result in a global recession before the end of 2024. The timing of this recession and the terminal policy rates that deliver this outcome are difficult to forecast with high confidence. 2 potential recession scenarios have been identified. The first involves tighter United States credit conditions interacting with the Federal Reserve's already restrictive stance to tip the United States into recession late this year. The rest of the world is expected to continue to grow at a subpar positive pace, with United States spillovers limited as the Fed sparks global monetary policy easing in 1H24. The second scenario sees central bank aspirations for a soft landing tempering the pace of tightening. However, hopes for a painless slide in inflation back to target are likely to be dashed, requiring policy to turn sufficiently restrictive to push the global economy into a hard landing in 2024. In conclusion, the global economy is currently in a delicate dance with inflation and the threat of a recession. The actions of central banks, the behavior of labor markets, and the trajectory of inflation will all play crucial roles in shaping the global economic outlook in the coming years.